What is going on, everyone? Welcome back to another video, another day, another dollar, where we're going to be breaking down the futures contract per usual. We'll be looking at the monthly as we come to a close, look at the weekly as we are starting a new week, and then update you guys on the daily, and then we'll briefly go over our 30-minute time frame and just kind of see how the profile shaped up today. I didn't do much trading today. I only took one trade early in the morning. Made what my target and my goal is right now, just trying to be consistent, not trying to give anything back. And today was one of those days where you could have easily gotten hurt and chopped up if you were not careful. And today is one of those days where a lot of people probably overtraded, may have blown up some accounts or taken some losses when they were up early in the day. And that's just something I'm trying to keep myself from doing. So anytime I make a couple points on the day, I'm gonna call it good, especially when we're having mixed market generated information such as we had today. So I hope you guys all had a good weekend. Now let's go ahead and get right into it. We are looking at the monthly as we are coming to a close. We have one more trading day left in the month. Tomorrow is Halloween, so we'll see how that how that affects the market. I doubt it does, but we'll see how it affects the market as we come to a close. Right now, monthly's been one time framing down 2 months in a row. Put ourselves into a balance in August. We took out August's low in September, continued that in October. Now let's see what November has in store for us. Our target on the downside, I said back in September, was going to be June's low, especially if we got to the 200-day moving average and got anywhere near those gap fills. June's low was the target. That was the first target. Now your second target is going to be May's low of 40.6225. Now, if the market continues to push down lower, you will be testing the 4,000 level, and then basically this whole balance region right here that we were in for a period of time before we broke out and made a good move up. So if we get anywhere in acceptance inside of this range here, and don't find acceptance above 4,000 or hold above 4,000, this market could really get ugly and start to push to the downside pretty good. Now, I'm not expecting that, as we are pretty stretched so far in the market. This might be another target on the downside if we continue to one time frame down. The only way that stops on the monthly is if we take out this month's high come November and then rally up in December, putting ourselves into a rather large balance initially. So come November, what buyers want to do to stop this kind of slow drip down. Now, volume has been rather, it's been okay. It hasn't been heavy. It's been okay. But they definitely want to see us come back into a balance by taking out this month's high up here at 44.2325. We take that out, then the monthly will come back into a balance, and then obviously you'd want to see, if you're a buyer, this market continue to push up in December and into the close of the year. Now, for the sell side on the monthly, you want to continue to one time frame down. You want to take out this month's low. So far, this month's low is 41.2225, which I do believe was last week's low. We'll look at that here in just a second. And then target that 40.62, and then 4,000 level is ultimately your downside target, and then 3,800 from that point forward would be your next downside target. So sellers want to see this market continue to one time frame down. Now, we do have the Fed come out. Jerome will be coming out Wednesday, I do believe, if I'm not mistaken. So we'll have Fed come out. So right now, would not be surprised if we remain within a balance until the Fed kind of does their business. So far right now, on the weekly, we are an inside week after having an outside week down and then a pretty good follow through last week. We are having a inside week as of right now. So the weekly, one time framing down 2 weeks in a row. Sellers want to see us take out last week's low at 41.2225, set a new low on the month for the month of October, and or start setting lows in November come November. Your next downside target on the weekly time frame is going to be 41.14, and then from 41.14 will be 40.62 May's low. Okay, that'll be your next downside target for the weekly. Now, buyers want to see us either A, have an inside week and just chop around within this range between 4100 and let's call it 4250. See us chop around inside this, and then maybe next week put our come out of balance to the upside, or they want to see us take out last week's high, which was at 42.90.50. We take out last week's high, we have a good opportunity of putting this market back into a balance on the weekly time frame. So far an inside week, starting out the week of and yeah, starting out the week, it's a weird week, ending October and then starting November in the same week is kind of a doozy for me. All right, let's go ahead and look at the daily. Look at the daily. This is where things begin to get interesting. Look, volume dropping off a little bit. We put ourselves back into a balance today. We've been one time framing down on our daily time frame, 1, 2, 3 days in a row. And then today we put ourselves back into an initial 3-day balance. Top of the balance is going to be the 26 high at 4205 will be the balance high, and then our balance low will be 4122.25, last week's low. So one of two things: we'll find acceptance back inside of our previous balance if we get above 4205 and back test the 200-day moving average at some point in time, and then at that point the daily will be one time framing up, which is what buyers want to see. Sellers want to see a defense of the 4200 level and then roll back over and take out last week's low, and then the low of 4122.25, target 4114, and then 4062.25. So let's go ahead and update these balances. Balance low is going to be 4122.25. So that is your daily balance low. And now your daily balance high is going to be 4205. 4205 is now the balance high. So now we are in initial 3-day balance. So expect a lot of chop inside of here. We could potentially chop around until Wednesday, as the market has come back into a balance. And today was pretty much nothing but short covering and momentum buying, as the shorts just kind of gave up what they had on Friday with a double distribution day down. And I'll show you guys that here in just a second on the 30-minute time frame. But do not fail to notice, right? We've been talking about this for a couple weeks now. Lower highs, lower lows, lower highs, lower lows. The 20-day moving average is curling over. The 50-day moving average is curling over. And the 200-day moving average is above us now. We've been below it now for 1, 2, 3, 4 days in a row. Does not mean acceptance below it, but we could begin to start to see some type of acceptance below the 200-day moving average. So if we come out of this balance on the daily time frame to the upside, look to see how we react to that 200-day moving average. Do we reject it and then come back down, or do we not even get close to it? And sellers really defend this 4205 level, and we continue to push lower. I'm kind of expecting us to, or not expecting, but I could see us come out of balance to the upside, back test the 200-day moving average, and then maybe chop around a little bit more in that, in that range between 4200 and 4300 before we find some type of real direction in this market. Right now, the market is pushing lower, but has been slightly stretched, right? The market is extremely short from all of these days of longs up here. So all this inventory up here sold out and is now being accumulated down here. Now what happens in between is yet to be seen. So will we come up, test 4275 and roll back over, come back below this balance here, or is this a rest period where we're chop around, this inventory gets absorbed on the sell side and we continue to push lower? That's kind of what you're looking for here in the bigger picture. All right, now let's go ahead and look at the 30-minute time frames. Oh, whoa, didn't mean to do that. Sorry about that, ladies and gentlemen. All right, and here we go on our 30-minute time frame. So I left you guys on Friday saying that sellers wanted to open up in the lower distribution below 41.42. Okay, did not want to get above 41.47. If we did, then the sell game is over and we could be potentially putting ourselves back into a balance, and that's exactly what we did as we opened up in the upper distribution from Friday. So remember, we had two distributions. This was the upper and this was the lower due to the trend day with the set of single prints. Since we opened above that set of single prints in the lower distribution and we opened up in the upper distribution, sellers began to cover their short positions, right? Anybody that was short down here, right? Anybody short down here that was selling late Friday thinking this market was going to go lower began to cover when we opened up here, right? So as we pulled down anywhere near that set of single prints or near that lower distribution, guess what? Shorts came in, began to cover their positions, and momentum buyers began to buy this market back up, bid this market back up. So in any push down lower, this market was getting bid up, and that is mostly due to the short covering, right? All the shorts that were down here short, trapped, pushing this market up. And then we finally got a late day grind to the upside with momentum buying, right? So after we took out the overnight high, we took out the initial balance low, and we had taken out the previous day's high, put ourselves into a daily balance, and then we just kind of chopped around for a little while. And this is what I mean by people can find themselves hurt in these situations, right? They don't know which way this market's trying to go. So initially on pushes up, you could have shorted this market and would have been fine. Same thing on the long side. After we proved that we could not go trend and hold trend, after we attempted in B period, we finally filled that in D, or the fourth time frame of the day, and then just chopped around. So on any push down lower near the day's low, you could have taken a long position to rotate higher, right? Because you had two-sided trades. You could have taken a long position against the day's low because you had the shorts bidding it back up, right? So, and then you could have used 41.47 as your out. You would have taken a little bit of heat, right? If you're longing around 55 or 54, you could have taken about 10 points of heat. But this is why days like this are probably your worst risk reward. However, points were available if you were looking for the right opportunity. So on pushes down, you could have been longing. On pushes up, you could have been taking a short against the previous day's high, 41.76. Above that is where the short game was over for me. That's where I got involved. As on pushes up, I was shorting around the 70 and 73 level, using 76 as my out. If we gotten above that, I would have been out of the short game. But thankfully, just for the few time frames that I did trade early in the morning on pushes up, we came in pretty good, and I was able to get out of the trades for some good points. Ended up about 40 MES points or 4 ES points, however you want to look at it. So ended up pretty good on the day, just taking a few trades early in the morning. And thankfully, I got out when I did. So let's go ahead and mark our destinations. We go out with just the day's high and the day's low. There was no afternoon pullback low. There's no afternoon rally high, just the day's high and low. So we're going to go out with that. So low of day 52. Low of day is 52. Ooh. And if you made it to the end of this video, I do appreciate it if you guys would leave a like down below. If you're new, subscribe. As you know, if you're trying to learn profile, just trying to learn how to look at larger time frames, I feel like sometimes I could put out some valuable information. If you're looking for a mentor, please go check out Paul Asmar. He's got a great group of traders and a Discord that I'm involved in. I'm sure he'd be grateful if you guys swung through and checked it out. He has taught me everything I know. 41.9750 is going to be the high of day, and that is all she wrote. So we end up with value overlapping the higher and a choppy day to the upside. So expect a whole, if we open up inside of this range tomorrow, just expect a whole lot of chop between 4,200 and 4,150. All right, that's basically it. 4,200 is your no-go zone, right? You don't want to be a buyer in this range. Excuse me, just for you guys who look at support and resistance. In this range, you don't want to be a buyer. This is no-go zone. So we're going to red that. Yep, boom, no-go. Don't buy up here. You want to see if sellers protect this area. And where you don't want to be a seller, in my opinion, in the short term, you don't want to be a seller in this range, I think. This range right here, don't want to be a seller. Now, if you get below that, it's a different story. So you could find bids resting in this area here, in my opinion. So don't sell above 42.05, or don't buy until you clear above 42.05 with a trend day, you know, something like one time framing up, single prints, things of that nature. And then don't sell below 41.50 or 41.40 with the same concept, right? Unless you're one time framing down or single prints, or you open up with a gap and continue to hold that. So that is going to be my two no-go zones, right? I'm either looking to long around the 41.50 level initially, or I'm looking to short against 4,200 early on. Other than that, anywhere in between, I am not touching this market, as it could be very choppy until we get our Fed on Wednesday. So with all that being said, ladies and gentlemen, I hope you all had a wonderful day. Catch you guys in the next one. See you.